gotta get up out of feelings.
What's going on, guys? It's Mr. DEBT Joe Logue from the Money Etiquette Group here with another upcoming IPO video, and this week's video is about Cambium Networks. Now, for those who aren't familiar, Cambium is a wireless broadband networking solutions company. They help to provide services for companies like Sprint and different small businesses that need Wi-Fi help, that need help with internet service, or even providing it for a large or small number of people. They've been around since 2011, and their headquarters are in Chicago. So we're talking about an American, U.S.-based company where they have about 10,000 employees out of that headquarters location in Chicago. Now, when it comes to their IPO, just to put out some reference information, their ticker symbol will be CMBM. Again, CMBM. And they'll be listed on the NASDAQ exchange. Their pricing right now is saying between $13 to $15 per share. As we know, if you've experienced this enough, usually when it comes to the general public, when it hits, it's usually a little bit more. It might be $20 to $25 initially. Depends on how the hype and demand goes when it comes to when this IPO is first released. So keep that in mind. Right now they're saying between $13 to $15, and it's going to be on NASDAQ. Now let's get into the financials. In 2017, when it comes to their revenue, they made approximately $216 million, okay? And then in 2018, and I'm talking about fiscal 2018, they improved that number by raising it up to $241 million. As of first quarter of this year, which of their fiscal year, which ends in March, they're up about 16% compared to last year. So it seems like their revenue growth is increasing. It seems like they're doing well. But let's get into, are they profiting and what's up with their expenses? What's their cash flow? How do they look? When you look at their cash flow, they did turn a profit in 2017 for $9 million. But they had a loss of $1.5 million in 2018. And a lot has to do with the debt that they've taken on. When it comes to the first quarter of 2019, this year, they actually are in the black. Okay, they're profiting right now. I believe it's about $1.86 million as of this date. Of course, that doesn't say where they're going to be towards the end of the year, but they started off with higher revenues. They've decreased their expenses some. So it looks like they're in the black for now, but we know that when you release an IPO, you want to make your books look as good as possible. So, I mean, I'm not saying it's not legit, but we understand that there is a motive behind looking good on the books when you're going to release an IPO. Just putting that out there. When it comes to their revenue, 70% of their revenue comes from existing customers. So it seems that they do a good job of retaining customers. And again, they have a wide variety of customers. I'm going to put a list next to me, but it includes Sprint. It includes several sectors within the government, the U.S. government, and other private businesses. So you can see based on the list who, as of the moment, are a current customer, or, you know, a current business partner, you could say, but business customer of Cambium. And sticking with the finances, when it comes to how they're going to use the money, and getting back to that again, they're going to use a lot of it to pay off debt. Now, for some people, they could say, look, we wanted to see more money go into innovation. We know that 5G is going to spread nationwide in 2019 and 2020. So are you prepared to spread into 5G? Are you capable of making sure that not just with Sprint, but with all your customers, you can provide 5G services? Because if they can do so, of course, that means a lot. That means that they're going to be a great player in this game. And of course, it means that their profits will continue to gain. However, we don't have clear answers on that. We do see in small summaries that they say they're ready for that. So we're not going to assume just because they're paying off debt that they're not going to be focused on the future. Some of that money is for building better relationships and gaining more clients and making sure to service the clients they have to the best of their abilities. But do understand that a lot of the money is going to be used for debt. So if you're not okay with that, okay with a company raising money to pay off debt, maybe this isn't for you. But at the same time, I mean, paying off debt has never been a bad thing, especially if it makes you more liquid and cash flow positive. So I don't see that as necessarily a negative from my vantage point. Now, here's something that's a little bit different when we're talking about their stock and their shares. There's not going to be a board of directors. So when it comes to control, okay, and how you like your businesses that you invest in to be controlled, understand that there isn't going to be a board of directors just because they're going public. You can even say they're going partially public. So some people aren't cool with that. Some people would rather a team having a board of directors that represents their interests be there. Understanding if you invest in this company, there is no board of directors. So what do you guys think? With 5G coming out, we know what's going to be needed in terms of internet service and Wi-Fi and broadband services. We understand that with so much streaming going on, with us moving further into the digital and AI age, with soon enough holographic technology coming out there, that's going to depend on fast Wi-Fi, autonomous cars. We are moving towards speed, more speed than ever when it comes to how we communicate and how we operate. And you're going to need service providers like Cambium Networks to be ready to take on this push. From what I've read, they seem like they're ready to take that push, but I can't even say with 100% certainty they are. I just would think a business in this field will be ready for that type of move. And if that's the case, then I could see them being around in the next 10 years, especially if there's a merger between Sprint and T-Mobile and they're kept on as a service provider or as a network solutions provider. So we'll see what happens with that. Again, this is a kind of a risky, but not too risky, I would say, IPO, because there is some level of control that you don't see there with no board of directors. You do see that they are paying off debt, and you don't like to see a lot of companies with debt. But when it comes to their growth in terms of customer base, they're doing well. When it comes to being accessible because they're based here in the United States, that's good. When it comes to just being in this industry right now at a time where we're transitioning to 5G, and that work and that maintenance is needed heavily, they're positioned to do well. But you guys let me know what you think in the comment section. Maybe your business or someone you know is associated or affiliated with this company or has used those services. And maybe you're a tech junkie. Maybe you're a person that loves these type of companies. Let me know what you think, and if you're planning on investing. Again, remember, it's between $13 to $15, which more likely will be $20 to $25. And you might want to invest, you might not, but keep that in mind, and they will be on the NASDAQ under ticker symbol CMBM.